This is John Kamel, Michael Cusack, Louis Warren, Laurie Wheelock. Welcome NYPA staff, members who are participating. This is a scheduled committee meeting, which has been duly noted as required by the Open Meetings Law. I call this regular meeting to order. We will begin the adoption. We will begin with the adoption of the agenda. Do any of the committee members have any amendments to the proposed agenda?
Happy to move the agenda as proposed.
Okay, is there a second?
Second.
All in favor?
Aye.
Opposed? Motion carries. The next portion of the meeting will be held in executive session. The meeting will resume in about 20 minutes. Can I have a motion to conduct an executive session to discuss the financial and credit history of the particular corporation pursuant to section 105F of the Public Offices Law?
Motion made.
Second?
Second.
All in favor?
Aye.
Motion carries. Okay, we're back live. Can I have a motion to resume the meeting in open session?
I'll make a motion.
Okay, can I have a second?
Second.
All in favor?
Aye.
Motion carries. I'll state that there was no votes taken during the executive session. And I'll ask Angela Gonzalez, Senior Vice President, Internal Audit, to present her update in the 2024 budget. Angela?
Good morning, trustees, EMC, NYPA colleagues, KPMG. I'm glad to be here this morning to give you an update on the 2023 internal audit plan for both NYPA and canals, as well as the EH&S compliance plan, and also present to you for approval the 2024 internal audit budget. So if we could just go to the first slide that shows the internal audit scorecard. So the scorecard is as of the end of November. To the left are our internal audit metrics. To the right are our metrics that we track for observation status. So at this point on the audit plan completion, we are at 66%. Please recall that our plan is from April to March. So we do have another quarter to complete our plan. We're on track, though. I mean, the plan is definitely a fluid thing where we have audits that are moving into reporting this month, and we'll be issuing, issuing reports January, February, and March. So we're on target. We're on track to complete. The department utilization is another metric we track in terms of how we spend our time. So we have an internal target of 75% of our time is dedicated to audit work. The remaining hours are dedicated to our GRC support, data analytics, training, as well as administrative time. But we're usually by the end of the audit plan year, we're close to 80% or at 80%. And that's like, there's no benchmark for this, but this is generally where most audit functions should be in terms of audit utilization. And then the bottom half here is just our operational excellence metrics. So we do track audit deliverables with opinions. This is an internal target as well. We bumped that up from 50% to 65%. We're at 70% right now. Throughout the year, when we first do our plan, most of our plan is over 80% are audits, and then the remaining assessments advisory, but changes happen throughout the year. So we figured a target of internal of 65% was good to accommodate for those changes throughout the year. And then the middle metric here is field work to report issuance. There is a benchmark here. Gartner does provide a benchmark here. So it's in weeks. The benchmark is at 7 weeks. We're at, on the average 2.8 weeks it takes us to get a report out. And then the metric on to the right of that is the audit project lifecycle. The benchmark is at 10 weeks and we're at 10 weeks. So any questions on that piece of the scorecard? Okay. To the right here is the observation metric. So we actually have changed the way this metric, we're tracking this metric and how it looks. I think this is a lot clearer from what we had in the past. So it's broken down by year. It's broken down by high, medium, and low. What's dark blue is open observations. What's medium blue is observations that are closed. And what's in gold is the total observations for each year. Percentage is what's been closed to date, and the check means that everything's been closed by the due date. So for 2022, we have one high that is open. We have 7 mediums that are open. We have 8 altogether that are still open for 2022. But all of them are due 12/31. They're tracking to close. I'm going to talk about that in slides coming up a little bit more. And for 2023, we've identified 7, 4 have been closed. And you can see we're 27 we've identified medium and 23 were low, 57 altogether. But I believe this is tracking really well in terms of getting observations closed throughout the year and to show that remediation is happening. And then on the bottom here is just the pattern of how the high-risk observations have closed. In 2022, 5 were closed ahead of time, 1 on time, 1 was extended but closed on time. And then for 2023, as I mentioned, 4 were closed and 3 are still open. But they're due in 2024 because they were issued, this year. Any questions on the scorecard?
No, kudos to all for the benefit of the newer committees. Oftentimes we're dealing with, in the past, multiple years of observations that remained open. It was always a rub with us as a committee, and really not an Angela issue. It's an organizational issue to be responsive, and let's get closure here. So I look to this side of the table and say kudos for picking up the pace and bringing a proper level of attention to, close the matters out on a more timely basis. So well done. Appreciate, the efforts and the support there.
Yeah, management, I think, has really been very responsive to Angela's processes and good collaboration between audit.
Great to see.
Great. Okay, we can go to the next slide. This is just a quick snapshot summary of our quality assurance improvement program and what was done this year, what was highlighted. So there were no gaps in conformance of the standards. We complied with all. These, I'm just highlighting here some of the highly successful practices in terms of the standards that we demonstrated in last year, because it goes back a year that we're looking at. So in terms of, purpose, authority, responsibility, do professional care, internal assessments that we're getting done every year, our planning considerations during audits, and then the communications and reporting to management. There are a couple of opportunities for improvement related to further documenting our independence and objectivity related to our co-source partner. Just needs to document that their independence, as well as coordination for and reliance between second line functions, which is IBC and risk and ethics and compliance. Right now, we are preparing an assurance map. We're, I'd say, about 90% complete with that. That assurance map I will be sharing with our second line is basically demonstrating it's a template that the IA has given us to look at all our top enterprise risks, what the first line functions responsibilities are, second line, third line, what we've covered in terms of risk, and then the level of what controls are in our system and GRC as well. So that's about, like I said, 90% done. There's some controls that are not in the system yet, but we'll be sharing that. And I think that's a live document. We should continue to update. So that's one of the things we'll be working on. The next slide is just
Before you jump, so independence and objectivity. Make sure there's no yellow flag here. I mean, is there any implication that you're other than independent and objective? Is that merely a documentation issue?
It's a documentation issue. Yeah. It's just to say that because our co-source, they do sign that they're independent. We just don't have that document. So that's all it is.
Okay.
Okay, we can go to the next slide. This is just quick. These are all the standards that we checked off green. We did receive the generally conforms opinion. Like I said, there's no gap in conformance to the standards. So we can go to the next slide. This is basically to talk about where we are with our plan. So we have 41 projects on the plan. 27 have been issued to date. That has given us the 66% completion. We are anticipating 42 deliverables by the audit plan year end. At this point, we have one audit that's fully in reporting. Some are moving into reporting this month. We have 5 projects that are in field work and 3 are in planning. And then on the EH&S side, we have 4 audits. 2 have been completed. 1's in reporting. Another one is just moving into reporting as of because before you received your materials. And this plan is also tracking to close by the due date. Next slide. So this is where we are in terms of observation status. I mentioned before for 2023 observations for Knife Bend canals, we've identified 57 observations, 21 have closed, 36 are open, 37% of them have been closed ahead of time or on time with no extensions. And the bar chart is basically showing the pattern of how they've closed. And on the 2022 side, I mentioned 78 observations were identified, 70 of them have been closed. That's about 90%, 8 are open, 79% have been closed ahead of time or on time with minimal observations, extensions. Any questions on where we are in terms of the observation summaries? No questions. We can, the next slides are related to, I wanted to just highlight some of the things. These observations are from reports that were issued in 2022, except for the one high that was issued in Q1. Because remember, our audit plan year is April to March, so we will be issuing 2022 reports in 2023. So these are tracking to close by 12/31 related to the business continuity plan. So data imports are going into the business resiliency module. Their procedure has been updated in eScribe. That's tracking to close by 12/31, as well as conducting BCP exercises, which were scheduled for November and December. Those results will also be put into the GRC module, and that's on target. I did get an update from the next one related to physical security. The first observation here, that's been closed. That's new information. That's just been closed. So we validated this and closed it out. In terms of the second one below here, this is related to physical security alarm and access data. So this is related to alarm notifications for failed access attempts and physical access data to the physical security perimeters or areas. We know that the current system that's in place today has reporting limitations. It's also end of life by the end of December, and RFP is in the works right now. It should be going on, I believe, January sometime to get a new system. So there's better reporting, better dashboarding. And then also procedurally, the incident report and physical event procedure has been updated. This is also will be closing by 12/31. And then the next one is the one high observation related to the Canals Dam Safety Program Management Audit that we did. It's related to the asset maintenance requirements for water retaining structures. The canals, waterways, dam safety staff have updated the dam safety policy to reflect a risk rating framework based on DEC, the classifications and the general condition ratings. So it shows the risk urgency for water impounding assets. They do receive quarterly reports about these assets related to this condition rating. And they have done an assessment on identify what assets are high rated and have to be worked on first. They've done an allocation of their resources. They've identified resource gaps. They're working together to get this closed by 12/31. As far as I know, this is on target as well. And then the last one is related to Canal's non-SAP user access management, the Excel application. This application the Canals uses is for real property permitting. They are testing, they had to work on creating user permissions. It's in development. Once it gets tested and move into production, this is also on target to close by the end of the year. So that's where you are with some of these issues.
Angela, if you don't
Yeah,
mind me asking.
sure.
So for the ones that are closed out, like business continuity planning, physical security, the alarms, which are either closed out or being closed out as we speak.
Mhm.
So your team signs off on it and then senior management signs off on it. Is that the process?
The process is senior management sends us the documentation. They sign off on it first, and then we validate what they're
validate.
providing us, and then we close it out in our SharePoint system.
Got it.
Yeah,
Thank you.
that's how that works. Okay, if we can go to the next slide. This is related to our EH&S compliance plan. So for 2023, we've identified 30 observations to date. 18 have closed, 12 are open. It's about 60% closed ahead of time. And there are no extensions, and these are on track to close according to their due dates, which will be in 2024. And then 2022, we have 37 that were identified. 34 were closed. We have 3 lows that are left, and those should be closed according to their due dates as well. I do want to just mention that any observations that we did find had no substantial risk to the environmental health and safety of employees, customers, or the public. There were no violations that would lead to any penalties or fines for violations. So I did want to mention that. And the next piece, the next slide, it's just related to our strategy, just keep some key highlights of, so there were 3 components to our strategy for 2023 and continuing into 2024 related to organizational trust, ESG, and data analytics. So we've really fulfilled the components. We've completed the components of the organizational trust, ESG, and data analytics continues on in our strategy as we go year to year. We did a trust assessment over the summer. It was debriefed with EMC between September and October. We did, there was different, in this trust assessment, there were 18 different trust domains. NIPA did really well and predominantly was at benchmark or higher. For these 18 trust domains, and some of them are highlighted here, were cybersecurity, compliance, sustainability, and DEI. We use that information to help add questions to our risk assessment interviews that we conduct for planning for 2024's plan. And then on the ESG side, we really made an effort this year to understand our ESG metrics as an organization. We've included ESG questions into our interviews template. We've also mapped our 2023 plan just to see where we fell in terms of ESG. We overall, between the EH&S compliance plan and the internal audit plan, we were about 91% mapped to an ESG. That is going to be a baseline for developing 2024's plan. So we want to be in alignment with that for next year's plan as well. And we did do some training. We had certificate training for the whole staff. There's a test that's attached to this training. Many of our staff have already passed the exam. And then we conducted an ESG audit and provided some valuable insight to management regarding our ESG metrics. And then on data analytics, we have continuous auditing. And what that means is once we build a routine and we can consistently run it, that's what's called moving into continuous auditing. So right now we have 3. We definitely consistently run either monthly or quarterly, and we're waiting on a data repository to be built so we can work on other data analytics routines so they can be run. Now, this really provides value to our stakeholders throughout the year, so things that we identify outliers that look a little strange that they may not look at, we're giving that information to the business so they can say, oh, okay, let me investigate that. We haven't found anything we found some things that are odd, but nothing that's alarming, but it's still good as a good check. And then we have data analytics projects that are in development right now. And once our data repository is built, I believe the infrastructure is being built right now, that it's going to give us the ability to get that data quicker so we can turn these routines around faster. That's where we are with strategy.
Thanks, Angela.
That is my update.
Anybody have any questions for Angela on the update?
Let me just, ask for you to editorialize a bit, Angela, in terms of where you see the organization, what the trends are in terms of themes. Always ask about what are some of the underlying themes. Are there new themes or repetitive themes? Where do you see the organizational health and risk appetite?
Okay, so I would say the overall control environment, I'll start there, is I think it's improving year over year. The high risk observations are trending downward since 2020. So that, and I also believe that with the help of IBC, Dolly's help, working with management, that has significantly changed the control environment where she's engaged with the business stakeholders on their policies, procedures. Top three themes, policy and procedures is not one of them. So this is the second year in a row that we're seeing that happen. Generally, the top things have been control design deficiencies and limited management oversight, which is really related to maybe inadequate project governance or ineffective management review, things of that nature. And then some information security controls that needed some strengthening. So, but overall, I would say the control environment is definitely improving year over year.
Have there been any major hiccups as a result of the higher risk issues or concerns you've identified? So
No.
We haven't had any operational speed bumps or anything?
No, nothing that we didn't take
Do
care
you
of.
deem them a high risk, not because of what has happened, but what could happen?
Absolutely, yes, yes.
Okay. All right. And you'll give us more complete review of all of that as part of your wrap up in the
For the March
spring.
meeting, absolutely.
Okay.
Yeah, Angela, just one question on your organization. So do you have internal auditors on your team at all, at each of the sites, big sites?
No, they're based here in White
They're
Plains.
based here.
Yeah, they
So
travel to the
they
sites.
travel. So you send them out to do their
Yes.
inspections.
Yep, absolutely. Mhm. Okay. Well, I
Like
think,
Angela was referring to before, Dolly Jinbit, who's here today, she's in our group. She heads up internal business control. So she helps coordinate sort of the management side of the response and making sure things are getting closed on time. They did a whole policy and procedure, review, rewrite, update. And then we make sure that it's on a regular topic on the agenda of our Enterprise Risk and Resilience Management Committee that we track these audit findings. So Dolly's done a really great job. Just want to give her some credit for that.
okay,
Okay.
guess we can go to looking at the budget.
Go ahead.
Drive on.
No, I think it's gonna, they're waiting for Carly to put it on screen.
We got it in front of us.
Okay,
Keep
fine.
talking.
All right, so pursuant to IA Standard 2020, the internal audit must present the budget to the audit committee to approve. So if you took a look at the numbers, as you can see that our 2023 budget and actuals, there's a definite difference between, there's an increase. And there are some key items why. I just want to highlight why the increase. One was, I guess, in payroll, we hired a couple, we had lost about 6 people and about 30% of my staff in 2022. We were able to hire 3 more in Q1 of 2023, so the payroll costs went up. The other thing I do want to mention is our software maintenance. We did allocate dollars for contingency in case we have to go to a new audit management system. We've been having issues with the observation management module as part of GRC. We did hire a third party to make those fixes. The fixes were related to notifications that get sent out for updates to be made on observations that are open. Those were not working. They are fixed right now. We've tested it. They're in production. We're going to flip the switch on that module in April when the new plan starts. But this is just a contingency. That's why those dollars are a little higher for software maintenance. But the biggest increase here was really for co-source, and that's got to do with the way our staff model has changed, where we had dedicated resource for IT audits, but now we have dedicated co-source resource for business audits as well. And their rates also went up with the new contract that was just approved last year. So this is basically where we're seeing the increase. We've actually increased our budget because of these increases that we saw in 2023. Any questions related to the numbers here or related to the budget?
So just give us an update on staffing and the need for the increased reliance on, outsourcing. Where's the world of the talent world? I mean, what's
Actually, the labor market is changed. It's better now. So we're hoping to be able to fill those 3 positions that we do have open and reduce the co-source. We always will have IT dedicated resource, but I really would prefer to have my own staff for the business side. So I'm looking to reduce, we budgeted for it, but this is just based on what we project will be, that the need will be if we don't hire some new staff.
So how much of the 2.5 million is for your business audits versus the IT outsourcing?
I would say they're probably split in half about, you know, it's even. It's not really one more than the other.
So you're saying, so how many positions would you need to fill to save $1.2 million and not outsource $1.2 million?
I filled all three of them.
I'm sure you're gonna fill 3 positions for less than $1.2 million.
Yes, but that's what my head count is. So that's what I'll be filling is the 3. Right, so, because they'll be full-time. Right now, I have 8 co-source, 4 are part-time and 4 are full-time. The full-timers we've always had, but the part-timers are new. So we won't be needing them if we have 3 additional headcount because they'll be full-time. So that's what I'm looking for
I'm
next year.
just trying to understand, maybe I'm missing. So you're saying if you had 3 more full-time people, your outsourcing budget would be cut in half?
I wouldn't say in half, maybe a third would be cut because remember, the outsourcing budget also accounts for support for data analytics as well. It's all in. It's not just the staffing piece of it. So this budget number accounts for everything.
Okay, I'm just trying to understand the trade-off. I appreciate the talent challenges and how we navigate that. I don't know what else can be done, Karina's World or otherwise, to further support it if we're,
I would say it's a general industry concern right now, just for accounting professionals in general. There's been a real difficulty attracting people even out of college into entry-level positions, audit firms. I mean, Scott can probably attest to it. You know,
Yeah.
people would rather be a crypto trader than a auditor when they come out of college. So we've been having
I get it.
issues with that. But no, it's really been, and it's been, a couple articles in Wall Street Journal and things like that, just in terms of the industry struggle around this. So there needs to be sort of they got to make it a little more sexy or appealing or whatever they have to do,
So we.
Yeah, so
I think I would add too, there's always been historically a higher churn rate in internal audit. That's something that we've experienced certainly since I've been here.
Absolutely. Every year we've had some kind of.
Ideally,
staffing
you like to think the
turnover.
churn's more internal than external, but I'm not sure what our experience is or isn't, how much of the churn stays within the organization. I'm looking at it as a third of our budget's, outsourced dollars. It's pretty significant.
Yes.
I'm not sure there's any other, you tell me, are there any other functions in the organization where we outsource a third of
I don't
operations?
think so, no.
So just the business model, how we, look at that, both from a quantitative and qualitative standpoint. So net numbers, obviously, it's more than creeped,
It's gone up
significantly accelerated. So I'm not trying to push back to compromise outcomes. But on the other hand, is there anything we can do to make it more controllable?
I think the last time we talked about this, we were having difficulty hiring on the outside, and so we had
So
to
cheeks
dip
in the
into,
seats has always been
we
an
had to
issue.
dip into the co-source in order to make sure the work got done. But with an improved labor market, we're hoping that we can, get those people in full time and have a corresponding decrease in the co-source.
Well, let's keep
That's the goal.
talking about it.
Yeah, absolutely. Sure.
I'm always one that struggles to, it just has to be what it is. It's how can we be better? How can we optimize the moment? So, okay.
Okay, so with that, internal audit is requesting that the audit committee approve the 2024 internal audit budget.
We have is there a motion that we approve the 2024 Nipah Canal internal audit budget? For a second?
Second.
All in favor?
Yeah, I'm just one more. So in terms of 23 budget versus 23 actual, Angela, I'm just focusing there. And it's a combination, the overruns are a combination of both internal and external headcount and talent?
Yes. And the software maintenance really, contingency, that's what's making the budget higher than it was in 2023. to
So
be
the,
more in line with the
our
actual.
internal numbers being 600 grand, 600 plus over budget is a function you hired more
Hired
people
three
than you,
peop- Three.
and you didn't plan on any of that.
No, we didn't plan on hiring because we didn't know what the market was gonna be like. So, but the market turned and changed in the beginning of this year, so we were able to hire 3 more people. So that's why the increase in, payroll and benefits for those 3 folks.
I doubt market's 200 grand ahead though.
These numbers come from budget, so they're specific
Oh.
formulas that they have.
Maybe
It's
you
based
could
on
come
our
back to
headcount.
us, maybe you could come back to us with a little
Sure.
more detailed
I can
explanation
get that.
there. So you were able to hire more people than you planned, but then we also had to spend more, another 600 grand, 40%, 50%, 40% more externally. So if you can come back with a
Sure.
little more of an explanation there.
Absolutely.
Apologies for auditing the
No
audit
worries.
budget, but just trying to make sure we've got a good understanding here of,
Well, like I mentioned, the Deloitte's our co-source, so the increase in the budget is not only just for headcount and they're just co-source for audit work, it's also for strategic items that they help us with on data analytics supporting that. So those hours are included in there.
okay.
You know.
Well, if you could just come
I
back
can
to us
break
with
that down.
a little bit more, step us from last year's budget to this year's actual to next year's budget.
Okay,
Because you're looking to spend more internally as well as externally.
okay,
And just how that aligns with objectives and outcomes,
will do.
okay?
Yep.
So I'm happy to support with the expectation that we'll get some more analysis, okay?
That's good.
Absolutely.
So there was a second. All in favor?
Yeah, aye.
All right, motion carries.
And you'll circle back to us, Angela, in the short term. We don't have to wait till the next meeting
Sure,
for
no, we
that.
can
You'll
get this
just come back
analysis
to us
together and send it
another
over.
week or two with some more detail on that?
Mhm.
Okay, all right, thank you.
Okay, gonna now ask Scott Heiser from partner KPMG to present his update.
Thank you.
Scott?
Thank you. Good morning, trustee members, committee members, members of management. With me today, I have Chris DeVenzo, who is our senior manager, who's been with me many years, and all 5 years I've been on here, he's been our lead senior manager, and Ryan Gibbons, who is our junior manager, who also helps Chris lead the day-to-day efforts on the engagement. I know we have a few new committee members this meeting, so I just want to maybe give a little bit of background, kind of our history here, myself. My name, Scott Heiser. I've been with the firm my entire career. This is actually my second stint on the New York Power Authority. My first stint was a dozen or so years ago in Chris's role. Currently, I'm in my 5th year, which is scary to say, of the 5-year rotation. It goes very fast. Just to give some background, like when I came on the account, it also coincided with both Adam and Sundeep, the controller. I think within weeks of each other, we all started my new role as the lead partner and Adam and Sundeep's role. So I think that gave, at least for me, a really good chance to take a fresh look at how we execute the audit and work together and not get stale. So, a lot of what we've tried to do over the last 5 years has been a collaborative effort in being thoughtful in our risk assessment. And that's, if you're in the industry, it's something I know the industry is putting a lot more effort on, to be more thoughtful so that we're focusing the right time in the right areas and not so much in not focusing as much in the lower risk areas and being more thoughtful in our audit approach. So, if I go back 5 years, I think that was one of our goals. Another one, and some of this Chris will get into in the presentation, so I won't try to steal all of his thunder, is just being more open, communicative. I think we have, we've made an effort not just to have standing meetings, but have more ad hoc meetings when needed. And I think the dialogue back and forth has been in my opinion, and management can speak for themselves, a two-way street where we've given some feedback and dialogue, I think, to improve the financial reporting process and vice versa to help us improve the efficiency of the audit and take some stress out of the system. And there's there's a variety. In the last 5 years, we had a lot of things with the lease adoption, the two lease, the OPEB reformations, multiple financing. So, and there's more on the horizon, with the growth and clean path and transmission. So a lot going on, I think, and I think we've been able to navigate through that pretty cleanly over the past few years. So I think that's kudos for everyone on Adam and Sundeep's team. And I think we've made strides in improving the process on the audit side, taking some stress out of the back end, which you'll hear about. I think every auditor probably says accelerated work. I know, at least for our firm, it is not just saying it. Like, we now have, and it started with our public clients and it's working its way down through our private companies, where we have deadlines to meet throughout the year. And that's only going to continue to, I guess, a couple of things: take stress out of the system, improve the quality. And we've done that here. I don't think we're at a point where we're done doing it, but we've continued to try to get some real quality work done before year end. So that February, March, though still painful, I'm not going to lie and say we're not working hard and the teams aren't working hard, but to continue to take some of that stress out of the system. And I think it's another thing, again, I think we made some major strides on and we'll continue to work through. And then probably last thing, just highlights, and I guess this is nothing, I won't say it's nothing new, but just the use of technology in the audits. Us as a firm, we've made significant investments in AI and some deals with Microsoft. And I think, we've started some things here, and Chris can touch on some of those. And I think that will continue. Part and parcel, I think, improved quality, the drain on getting people just to get the work done, I think help offset some of the staff needs that we have as an industry and a practice. So I think that's another thing we've started here, and it will continue to ramp up, not just here, but across the industry, that we'll try to take advantage of with the Power Authority. So I think and then in terms of where we're at the moment, we've commenced the interim work that's underway, and that will go right up and through to the end of the year. And then I'll say sometime early February, then we'll have the full team back right on through the filing of the statements here towards usually around the latter half of March. And at this point in time, no significant issues or concerns. Obviously, we're still working through our nuts and bolts at work, but nothing concerning at this point. But I'll pause. I know, Chris, we'll take you through the deck, but please stop us if you have any questions during the presentation. If you're going to wait after the presentation, don't hesitate to stop us and ask if you have any questions, and we'll try to address them best we can.
Okay, thank you. If you jump to slide 2 in our slide deck. So this slide here is kind of a reminder, and some of the things Scott touched upon, but our emphasis to deliver a quality audit and a better audit experience. Scott mentioned 3 primary ways we do that. Accelerating our audit work allows us to focus on things earlier on, identify issues, manage those issues if they come up, and devote our time and efforts to more risky areas of the audit. Again, risk assessment, like Scott mentioned, we've done a lot of risk assessment, really focusing our time and efforts on more critical parts of the audit. Allows for us to do quality work on those more risky areas. And then use of technology. So we've implemented a few different technology routines on NYPA. Our journal entry data analytics, which allows us to sift through thousands of transactions quickly and identify outliers that we would focus our attention on. We've used a compare engine and a matching engine, which takes 2 sets of data, compares them or matches them. Again, looking for outliers. What that does is it reduces sample sizes in areas that we need to do testing. It really focuses our attention on things that are outliers, things that we wouldn't expect, which would pose a higher risk. Moving to slide.
Based on the pictures on the cover in here, I mean, everybody's happy and smiling. I just don't understand why the profession's having a tough time attracting talent. I mean, obviously, based on these live action photos, I mean, it's a great place to be.
We have a lot of good actors.
And every audit's enjoyable and fun. I just don't get it. It doesn't connect.
You could skip ahead to slide 4. That's just general themes for our discussion today. So this slide outlines the deliverables for 2023. So consistent with prior years, we have 3 main reports, which is the audit report on the consolidated financial statements and the fiduciary fund statements. We also issue a report on internal control over financial reporting, which is the yellow book. It's in accordance with governmental auditing standards. And then we also issue a report on the authority's investment compliance with board-approved policies as of the end of the year. The last report here is a, if applicable report, it's a report on compliance with requirements that could have a direct and material effect on major programs. So this is related to federal grants. If NYPA receives a certain dollar amount of federal grants, there would be an audit conducted by us. The deadline for this report is actually 9 months after year end, so it would be due September 30th, 2023, rather than the March deadline.
And
So
this is new that we will probably be facing at some point down the road that we haven't in the past, when we get federal grant money, that we trigger a single audit act requirement.
So
that's gonna be-
nothing, as we sit here, there's nothing?
No, we see it as we receive the NEVI funding for EV. We may get direct pay for one of our projects. We're looking at, some other potential grant funded programs, some with canals. So all of those are sort of new for NYPA that we haven't done in the past, and it will probably trigger the need for a single audit requirement on those grant activities. Just going to require more work.
Yeah, if you trip a certain amount of money, then you just you trigger that requirement.
I'm just asking, what have we tripped, to where are we? Is this,
If you tripped this year, Chris's point, then you would have, the requirement is until September. So you would have a runway till September of 2024. So you'd have to complete the work.
Yeah, I think to answer the question, I think as we sit here today, we haven't triggered or tripped
and
that.
that's all I'm
Yeah.
asking, right?
Yeah. But we're pursuing multiple levels of funding, and as you probably have read, they're coming out with a series of funding opportunities. So round
But it would
one,
be 24, which would trigger audits in 25. That's all I'm asking.
is that right? Yeah.
Instead
It
of,
would be
are we
a,
going to trip anything in the next 2
September
weeks?
30th, 2025 deadline. If it happened next year, yes.
Right, that's all. The next
Yeah,
2 weeks
sure.
aren't going to trip anything for 23.
No, okay.
This would be for 24, audit in 25.
We just
Okay.
submitted a grant application last week for about $30 million related to the canals. If we're successful in getting that, so it's all dependent, do we get it? That would probably trigger it just for that. And as we do roll out the EV program, there's going to be some federal NEVI funding for that may also trip it as well. So we do see it on the horizon.
Got it.
Transmission work too. There are funding opportunities on the transmission side for federal dollars that we're pursuing.
Okay.
Let me ask a strategic question on these reports, these specific reports. Given that NYPA is ramping up its capital investments as we look forward, is there any other reports that are audits that we should think about? I guess it's in the consolidated statement of financial results, right? So that increased capital funding would be coming out of that. But is there anything else that as we think about the next 5 years of NYPA, having $1 billion plus of investment, is there anything else that we should be thinking about?
Yeah, if the way certain financings, like for example, some of the recent transmission financings triggered some incremental efforts and work, albeit it was all within the consolidated notes. So there was incremental auditing efforts and reporting disclosures. There could be, to answer your question, depending on how financings are done, I'll refer to them as a standalone type project debt type of, so that's something, depending on how certain things are financed, those type of additional audits from that requirements could be triggered.
Right, and the
Also the
consolidated
captive.
is broken out more. We break out canals, we break out the separate financed projects for transmission. That number has now grown since we've done now to the captive formation that will also require standalone financial statement report for Department of Financial Services that oversees the insurance department. So all of those activities are now being broken out separately, although consolidated, but requires additional work on each one.
So that makes sense. Yeah, thank you. That makes sense. We, because we're going into a pretty heavy, ambitious and positive next set of projects. So those would be standalone as you think forward. That's good.
Yeah, I mean, it's just gonna be a function of how we finance and fund them.
Yeah.
What bondholders are gonna want and, their comfort and confidence with, the financial condition and outcomes at least applicable to them, special purpose entities, things like that, how the structure is, so.
That's helpful. That's good.
Okay, jumping ahead to slide 5. Again, some of this Scott mentioned, but really an effort to appropriately manage the audit and work closely with management on a regular basis. So here's a summary, and on the next slide, we have some
Again,
details.
everyone's very happy. I just don't understand. Yeah, exactly. See, why, Michael? I mean, I just don't understand the talent issue when everyone's this happy.
They probably took them in the summer, not during busy season.
Oh, okay. They look busy. They look busy there, Chris. Yeah.
So moving ahead to slide 6, just provide some more details on how we're, effectively managing the audit. So again, accelerating work, it's a common theme. It's a real focus of us and the firm to push forward work. This year, we did effectively accelerate procedures related to OPEB pensions and investments. So that's something that we historically did in February, March. So we were able to begin and get a substantial amount of that work done at this point. In addition to revenue, PP&E expenses, all of the kind of large volume of transactions we have historically done during the interim period. So again, we're successfully moving stuff up and, will only help the February, March timeframe and reduce some compression there. Actively listening to feedback. So we meet with management at the end of the audit to debrief on things that we could have done better, things they could do better. Obviously, each year you want to improve at least something in the audit and make the process a little smoother. So we do that each year. We did meet with them in October. We met with Adam and Sundeep, and then we met with the accounting team as well to just further look for ways to improve and implement. So we put some things in place this year that I think will be helpful to the audit process. And then along the same lines, proactive communication, meeting regularly. We meet weekly, bi-weekly, depending on the stage of the audit and how busy things are. We try to be transparent in our audit status, transparent in things we owe, things management owes us, and, really working together. We're all working together to the same deadline. So all things we've been doing and continue to improve upon each year. And I think it's all, going very smoothly so far this year. Jumping ahead to slide 8, some of our required communications. So here is kind of just a table of contents of what's behind here. So nothing to touch upon here, except obviously, as noted here, no significant findings or issues that discussed with management to this point during the 2023 audit. Slide 9 outlines our client service team. I think the key point to note here is, as shown in blue on the slides, the blue boxes represent continuity on the team. So we have strong continuity at all levels, partner through MWBE firms that we use on the engagement. They've been in place for the last 5 years and continue to support us in our audit.
So Scott, you'd have to rotate off?
Unless
Next go around,
there's a change in the law in New York.
We have to go out for proposals, right? The cycle is up, so.
Yeah, the proposal, I think, is a NIPA policy. The rotation, my understanding is that's in
the law. So some other entities, have had the same firm for, let's say, 10 years. Their requirement, if they go beyond 5, is to have a partner rotation in the event of that. For us, we're going through the RFP again, and, will depend on the outcome of the RFP.
Understand.
So that's where we're just, the difference there. So either way, if 5 years up from the RFP, or if you were to continue, you have to have the partner rotation.
But you don't have a firm rotational requirement?
We do. So for public is 5, but for a private a non-SEC
Ah.
registrant, it's 10.
Got it. I'm sorry.
But with the rules and laws of New York, I would have to rotate.
So
off
it's our
once
policy that would require you to rotate off.
Yeah, it's the,
It's part of the Public Authority Accountability Act.
Got it. Okay.
Good. Slide 10, just some reminders about materiality. To highlight a few things, materiality is a matter of auditor judgment. It's based on qualitative and quantitative factors, so it's a little more than just, is it a big number? There's qualitative assessment that goes into it as well. It considers the users of the financial statements as a group in determining materiality. And it impacts decisions such as nature, timing, extent of audit procedures, risk assessment, and things that are considered misstatements in evaluating if they do arise. Moving to slide 11, this is a high-level timeline. In general, it is very consistent with prior years, but I do know there are some new trustees, so I'll go through some of the details. But April, June, July, September is all planning and risk assessment. So debriefing on the prior year, meeting with management to get an update on how the business is performing, performing preliminary risk assessment, involvement of others, things of that nature on the audit. The current period, October to December, as we've mentioned, is where we have made efforts to accelerate the audit. So performing interim substantive procedures, process walkthroughs, evaluating the design and implementation of any key controls, performing inquiries, things of that nature. And then in January through March, when we come back for year end, it's finalizing our audit work over any remaining test work, finalizing walkthroughs, reading financials, evaluating disclosures, and obviously issuing our deliverables, all before the filing date of the end of March, similar to prior years. Next slide is a summary of our preliminary risk assessment. So we have identified one significant risk. It's the significant risk of fraud over management override of controls. This is a risk that's present at all entities, so it's not NYPA specific. We do a number of things to address the significant risk, mostly surrounding journal entries. So we review the design and implementation of management journal entry process controls. We do a completeness test of journal entries to make sure that it's a full population from beginning to end of the year. And we do a search through journal entries for different criteria to identify high-risk journal entries that would be, subject to further procedures. And then just to touch upon a couple of other significant audit areas, I think, the significant audit areas that we spend a lot of time are pretty consistent with historical areas. Revenue, we do bill recalcs of customer billings. We test the price and quantity on those bills. We test accounts receivable balances and assess collectability. We do confirmation procedures with the New York ISO and analytical procedures, again, over quantity delivered to customers over the period. PP&E, we focus on the capitalizable nature of costs. So capital versus expense is a key consideration. That's the primary focus of our PP&E work, along with testing depreciation. And then pensions and OPEB, big thing here is we engage a KPMG actuarial specialist to address the estimate and the measurement uncertainty involved with the valuation of those obligations.
Chris, on the payment side, on the payable side, what type of testing do you use for that?
So typically it involves, I think the biggest thing and biggest risk is completeness of payables at year end. So search for unrecorded liabilities is typically the big one, where we take payments that happened after year end and go make sure that if it applied to the prior year, that it was recorded at that point. We also do sample testing and some analytical procedures over expenses over the period. So that would capture some of the year end stuff.
Well, I think you both said, one of the benefits of AI is that you can use more AI to do more sampling of abnormal payments or receiving.
Yeah.
In your processes.
Yeah, for sure.
And we don't have anything significant at this point relative to our significant risk? You have nothing to report to us publicly or privately?
No, I think some of this work happens after year end because we need the full
Understood,
period.
yeah.
But we are in the process of re-understanding the process with management. Obviously, we take a fresh look each year. Some of the things we'll assess is what the design of the controls are in place. We do have a meeting later today to actually cover some of that. So, yeah, nothing to report at this point.
Okay.
Let me ask a question about the state. So does the state comptroller get an early look at the audit reports? I mean, how is these three for the newer members of the trustee members? Just trying to figure out that.
Yeah,
interplay.
they get our audit report. It's actually referenced in the what they call the ACFR, which is the annual comprehensive financial report for the entire state. We're considered a related entity, right? A covered entity as part of the state. So they do get all the information. They do come in and look and do their own audits from time to time.
Yeah.
There's a more performance audit related rather than financial because they are relying on what KPMG does. So they, not only comptroller, but, public legislature, governor's office, there's a public authority accountability office that sits within the Division of Budget, and they also review all the things from all the authorities as well.
That's
So there's
helpful.
a lot of oversight.
Yeah, thank you. That's helpful.
Okay, slide 13 is a highlight of the involvement of others on the audit. So I did mention the actuarial specialist related to OPEB and pension. We involve a tax team member to take a look at the tax exempt status and make sure that's still appropriate. National pricing desk over valuation of investments. And then a valuation specialist related to derivatives, which is either from a risk assessment standpoint or actually testing the valuation of the derivatives at year end pending our risk assessment conclusions there. And then internal audit, we perform inquiries, I think early in January is the plan. Helps us with some risk assessment and planning, but just want to note no direct assistance role there. It's purely a risk assessment and planning inquiry process. And then with that, I'll pass it off to Ryan to take us through the last few slides here.
Yeah, so on the next slide, we'll like to touch upon the cybersecurity considerations that we've been looking into. Obviously, with the higher, move to a remote workforce and the increase in cloud operations, there is in turn an increase in risk associated with cybersecurity. So one of the things we as the external auditors would like to just to gain an understanding of the IT environment over the IT controls and different operating systems of how they, what risks would be apparent at NYPA itself individually, and also what risks are in the industry as a whole. Another area we focus on is dealing with how management assesses whether a cybersecurity incident has occurred throughout the year. And whether there's an effective response plan in place in order to mitigate the risks involved and avoid anything in the future relating to user access or different types of IT application risks. Go to the next slide. Next, I'd like to cover the newly effective accounting standards under GASB. The first one we'll go through is GASB 94, which relates to the public, private, and public-public partnership agreements. These are similar to GASB 87 under the leases standard, where the GASB would like to increase the financial reporting behind some of these agreements with involving service to the public and service concession agreements. The next one is GASB 96, which is subscription-based IT arrangements, such as cloud computing or operating systems. I believe NYPA uses the SAP system, which would essentially be covered under GASB 96. It's similar to both 87, like I mentioned, leases, and 94. Whereas, GASB would like to increase the financial reporting around recording a subscription asset as opposed to just expensing the monthly payment to the subscription-based company. So that'll record a subscription right to use asset along with a corresponding subscription liability. So these are the ones effective for the current year. The next one down is GASB 99, whereas it's the omnibus for which involves the leases, the PPPs, as well as the SBITAs, which is the subscription-based IT arrangements, like I just mentioned. This is more of just a standard that they want to put forward to basically uniform all financial reporting between entities and make sure that, the agreements are being reported for on the same, standard throughout different industries and entities. The next we have the GASB effective in FY24. These will cover at the end of the year as well as in our next meeting, accounting for errors and changes to the financial statements, as well as compensated absences. Go to the next slide. Next, we'll have the some of the shared responsibilities between management and us at KPMG. This slide involves independence. It's imperative to have an open communication line with management in order to identify different affiliates at NYPA, as well as any relationships or related parties. This way, we're ensuring that we're maintaining our independence as well as vice versa with management. Following to the next slide, some of the other standard responsibilities between management and KPMG, like we all mentioned, communication is key. We like to have an open communication with you guys as the board, as well as with management and executive, the finance department. The next one. This slide deals with some of our standard inquiries that we will perform as of year end. We inquire with executive management as well as internal audit and the general counsel, just to go over if there's been any identification of any fraudulent activity or any non-compliance with laws and regulations throughout the year. So we'll perform these inquiries both at interim, and then we'll do another, towards the end of our year-end audit. And these are standard across the industry. So before we open it up to some questions, we do have some appendices here for you. The first one, if you skip to 2 slides. The next one, sorry. This one we have here is our audit quality and transparency report. So this is for any of you members that would like to take a look. Just some of the the additional resources we provide as a firm. If you go to the next slide. Here on this graphic, we'll show some of the investment we put into our continuous improvement, always like Chris was mentioning, improving our audit efficiency year over year. In the next slide. Here we show our enhancement of AI and using artificial intelligence in the audit, as well as the data and analytics that we've mentioned. Channeling some of this technology that we use in order to improve audit efficiency. And then the following 2 slides are just some areas for focus for the audit committee and any trustees to focus on, whether it be ESG or other oversight responsibilities and other areas to focus on. And then the next slide just shows, like I said, some additional 10 areas of focus. So if anybody has any questions, please feel free to ask away.
I'll just add on the appendices. I think there's a lot behind some of those links. If there's any interest in looking at them, further discussion, I'm happy to talk through any of them. There's an audit committee link there. We have an audit committee institute, where we have webcast, and there's change. So there's and I'll be honest, there is a lot of good information there. Some of it was highlighted here. So a whole bunch of different reports. Obviously, we don't want to make this story long enough. I don't think anyone wants this to be 500 pages, but there's between the reports, it kind of shows some of the things that the firm's focusing on with our people, our governance, our DEI, our ESG, and then a little gets into a little bit more detail on some of those audit committee trends and so forth. So if there's any, if information's out there, if you're any further questions or like to talk about any of that further, please let us know. We can get some more even more information for you, or talk about it at the next meeting if you like.
Appreciate it.
But that's all we have prepared, John. So we'll stand for any questions.
Any of the committee members have any questions?
Go
I'm
ahead,
sorry,
Louis.
from a process and protocol perspective, do you present to us quarterly or yearly? This is the
What-
yearly update.
What we've historically done and open, we can change it to be more of a quarterly update if you want, but typically, because we don't do a full quarterly review,
Yeah.
like a traditional, like a public filer, we traditionally do this session, which is kind of a status where we're at, planning, looking through year end, then at the year end in March, we do kind of a update of where we're at towards the very end of the audit.
Got it.
So
Okay.
typically, those are the two formal
Yep.
check-ins. From time to time over the years when things have come up, I've had like one-off conversations with the chairman, with John, but typically these are the two formal. But obviously we could, but we're open, to change that if there's a thought to, or need to do so.
In terms of process to date, anything that we should know as we sit here in the middle of December?
I mean,
No.
last year.
You're tracking on
I
schedule?
think we're, again, like to,
Support from the organizations, what's, anticipated, nothing
Yeah.
that you've,
yeah, I think we've gotten more done in this October to December timeframe than we did last year, which is always good. Nothing has come to our attention at this point. We work with management every day. They're getting us things timely, so we're moving along nicely.
I mean, I have no worries here about management not being transparent with me, John, to be completely honest. So that's usually not an issue. I mean,
Good.
between Adam and Sundeep are usually very open to picking up the phone and calling me if needed.
And the communication's really been good on our side in the response from them. One of the things we're doing is always focusing on the new accounting pronouncements, making sure we get those implemented properly. As we're doing more complex transactions, going to KPMG, bringing them in early so that we understand what the impact may be of these transactions, but also getting ideas about how it could inform the structure of the transaction. So we don't end up doing something and ending up with a unintended consequence. So that dialogue has been good. They brought in lots of industry experts whenever it's been needed. Last year we had obviously the big lift around AE2 and GASB 87 and all of that, which required a significant amount of time, not with just them and their national office, because it was really something very new and it was significant. So I think it's been a good collaboration.
we provided time for an exec session with you guys at the end of today. Is that necessary or it sounds like you have nothing to report at this point?
There's nothing.
We can do that in
There-
March when you're back.
Yeah, there's nothing additional I would have in that session unless,
Okay.
but obviously if you would like one, we could have it, but I don't have anything additional.
No, we just provided it in case we needed it.
I mean,
So,
I assume we can do one in March.
yeah, we'll do that for sure.
Yeah.
Okay.
Okay. Well, thank you, Scott. Thank you, Chris. Thank you, Ryan. There was no votes necessary or required at this, on that update. I'm gonna now ask Adam Barsky, EVP and Chief Financial Officer, and Sundeep Thakur, Controller, to present the next update. Adam?
Do we want to have everybody in here that's in here for this part of the discussion? It's up to you guys.
Doesn't matter, it's a public meeting. It's recorded, so.
Fine. Okay, my bad.
No, it's just that, as we mentioned earlier in the meeting, that the 5-year contract is coming up, which would be, effective towards the end of this year. So it doesn't cover obviously this audit year. So we are in the process of getting ready to issue that RFP. Now it's being launched this month and we would expect to have feedback and evaluations done early in January with a recommendation for a new contract at the March meeting. So just really a heads up that this is going on and what to expect in March, that we'll be making a recommendation at that time for a new 5-year contract.
and our evaluation process, and that effort is led by,
Sundeep and his group, but we have, others that, participate as well. So there's, good evaluation group that's looking at all those issues. Yep.
okay,
And I think your answer to this, Adam, so KPMG is bidding for that next contract, right? And there's nothing,
We don't know yet. We certainly
for
hope so.
them to determine.
yeah,
Yes, all our intentions are, we've already started the process. I think it came out officially Monday, so we've already had 2 calls and another one tomorrow, so.
okay,
Yes.
okay.
Any other questions? Ready? No one? Okay, there was no vote necessary required at this update. And now turn to the consent agenda is now before the members for the adoption. I ask for a motion to approve the consent agenda. Second,
I'll second it.
all in favor?
Aye.
Aye.
Opposed? Motion carries. All right, skipping right through everything here.
It's Tommy DeVito like,
Yeah.
closing strong.
All right.
Finishes strong,
All
Dennis.
right, that sounds good. So our
Another buzzer beater.
next meeting of the audit committee is scheduled to be held on Tuesday, March 26, 2024. I ask for a motion to close the meeting. Yes,
Second,
all in favor?
aye.
All opposed? It carries, motion carries. State that we are adjourned. Thank you.